Welcome to the Property Code. I am your host, Nick. Today, we embark on a journey into acquiring small apartment buildings as a powerful strategy to grow your real estate portfolio and secure steady income streams. Imagine a couple, Sarah and Jason, both in their early 30s and working in digital marketing. They had saved $20,000 and were eager to invest in rental real estate. After researching single-family homes, they realized that small apartment buildings offered the potential to accelerate cash flow and build equity more rapidly. They began by identifying properties with 4 to 10 units, where the combined rental income could cover financing costs and generate positive cash flow from day one. Their first step was market selection. They looked for cities with stable job markets, growing populations, and reasonable entry prices. They focused on areas with multiple demand drivers, such as universities, medical centers, and light manufacturing hubs. In one mid-sized city with a population of approximately 100,000, they discovered a 3-story walk-up with 6 units, each renting for around $800 per month. The building was priced at $400,000, representing a price per unit that was attractive compared to single-family home investments. Sarah and Jason conducted due diligence by examining rent rolls, expense statements, and occupancy histories. They discovered that the previous owner had neglected maintenance, leading to slightly lower rents. Recognizing an opportunity, they negotiated a purchase price reduction and secured favorable financing with a down payment of 20% and a 30-year fixed interest rate below 5%. They arranged a professional inspection to uncover deferred maintenance items and budgeted for roof repairs, electrical upgrades, and fresh paint in common areas. With the deal under contract, they created a renovation plan to increase the property's value and rental rates. They replaced old flooring in common hallways, installed energy-efficient lighting, and upgraded kitchen appliances in each unit. Their improvements allowed them to raise rents by 10%, aligning with market comparables. They also introduced water and heat sub-metering so tenants paid utilities directly, reducing operating expenses and increasing net operating income. Sarah and Jason developed a management plan that included hiring a small on-site maintenance technician to address repairs promptly, reduce vacancy time, and build tenant satisfaction. They implemented a digital leasing platform to streamline applications, credit checks, and rent collection. Their strategy improved occupancy to over 95% within 3 months, boosting cash flow and stabilizing revenue. To measure their success, they tracked net operating income, cash-on-cash return, and debt coverage ratio. Their initial calculations projected a cash-on-cash return above 9%, well above returns on single-family homes. The debt coverage ratio exceeded 1.2, indicating strong capacity to service debt. They maintained a reserve fund equal to 6 months of operating expenses to handle unexpected costs and vacancies. As the months passed, Sarah and Jason saw the value of their small apartment building appreciate by approximately 5%. Mortgage payments steadily reduced principal, and their equity position grew. They reinvested a portion of their cash flow into acquiring additional small buildings, compounding their returns and expanding their portfolio. If you are considering purchasing a small apartment building, follow these steps. Begin with thorough market research to pinpoint areas with reliable demand. Analyze the numbers by comparing purchase price to potential income and expenses. Inspect the property carefully to uncover hidden costs, implement value-enhancing improvements to justify higher rents, adopt efficient management systems to maintain high occupancy, and track key performance metrics to monitor your investment's health. Buying small apartment buildings can transform modest savings into a robust real estate portfolio. The combination of multiple income streams, economies of scale, and leverage amplifies your returns and accelerates wealth building. Thank you for listening to the Property Code. If this episode inspired your next move, subscribe, leave a review, and share it with fellow investors.